Annual Energy Trading Conference on March 23rd, hosted by the University of Houston Global Energy Management Institute at the UH Bauer College of Business, invited speakers from the energy industry to discuss the impact of Dodd-Frank on energy trading. More than 150 people attended the event, including students from UH Bauer College as well as industry professionals.
What we're trying to do here today is to get a perspective on what is happening in Dodd-Frank and what is likely to happen going forward, and what is likely to be the effect of Dodd-Frank on the energy business.
All you have to do is turn on the television today. The moment right as I was walking over here, there's a great debate about whether drilling in the United States for energy, domestic energy resources, is worth it. One guy was saying, it doesn't matter because oil prices globally, so we can produce as much as we want and it'll have no impact on the price of oil. Another person was saying, yeah, it will, it definitely will, and it also has jobs and trade balance and other impacts as well, and it will have a supply and demand impact. So the issue of speculation and energy markets, it's not going away. So in the financial markets, and our rules are only getting more prescriptive. We used to have more general policy-based solutions that were, as long as you keep it between the ditches, you're going to be okay. But now our rules are much more prescriptive about exactly what you should and should not do. And we may find out that I think, is an overreach in some respects, or we have unintended consequences we certainly can't anticipate by going through a quick rulemaking process.
Although energy derivatives are a small part of the OTC market, they are covered by the sweeping and comprehensive DoddFrank Act. DoddFrank Act and its resulting CFTC regulations will impose a significant regulatory burden on energy firms. It will also profoundly and pervasively impact energy markets, and although difficult to project with precision, some likely consequences are less hedging, wider bid-ask spreads, and more volatility, which is actually the creation of a riskier environment than existed prior to Dodd-Frank, which is not really the intent of the law. The Dodd-Frank Act also will result in increased spend on technology and credit costs, which will lead to increased costs to consumers.
How much of a risk premium because of Israel and Iran is in the oil price? And if you read newspapers around the planet, you are being led to believe that it's as much as $20 per barrel. But let's put that in the terms of business. The investors are being told that supposedly there's about a 20% per month return that they can capture. In other words, a 240% annualized return. Now, it's a curious fact that most of the hedge funds on the planet that trade these commodities lost money last year because they were all long. And the trade was to be short copper, and to be short natural gas, and all the things that got shellacked at the end of last year. So as we see what's happening with the gasoline price, and we see what's happening with the definitions of swaps, and we see what may or may not happen in airline and fuel hedging and so on, my concern is that we haven't even accurately specified the problem, let alone come anywhere near to some of the solutions.
I was the guy at FERC who was brought in to deal with Enron and the California crises. And that was a very different situation in that the events were out of control and the regulators were trying to respond and get in front of it. And here it seems like the regulatory process is what needs to be pulled into control.
This isn't an engineering exercise in Washington, and it certainly isn't treated with the level of sophistication of detail and understanding that everybody who has spoken today brings to it. The politicians deal with this on a much more generic basis. So you have to understand that when you go talk to them, there's a high level of frustration about, do they really understand what I'm saying? And the fifth or sixth meeting you have with them, they're still treating the information as new. So we deal with a situation of relative ignorance of Dodd-Frank, which is not to say we're dealing with ignorant people, but they just don't understand the level of detail that Sam will bring to it when he's talking about something. And that's what we do. It's a political process, not an engineering exercise.
A big deal about Dodd-Frank is it is imposing something that looks like banking regulation on all companies that transact in swaps, and it's not an easy fit. Swap dealers will bear the brunt, but as I think some of the other speakers have noted, nobody escapes, right? So everybody is going to be exposed to less liquidity in the market, which means higher costs. Hedging is going to be more difficult. Proprietary trading is likely to be limited, and compliance risk will increase.
While the Congress, in adopting Dodd-Frank, actually continued what we consider to be principles-based regulation, which of course is the model used internationally, the CFTC and some of the other regulators, unfortunately, are adopting a very kind of prescriptive, rules-based approach where they're actually telling registrants not only how they should comply with the core principles in the Act, but they're actually, in many respects, telling us what to do and how to run our businesses. And that's certainly a departure from what Congress intended, and I think problematic for each and every one of us in this room. Just given the magnitude of Dodd-Frank and the implications that it has for all of us, it's very discouraging to see the lack of cogent cost-benefit analysis and a true consideration of, how to strike that balance between appropriate regulation and the economic consequences of regulation.
We see ourselves as the energy business school. We have the most exhaustive inventory of courses in energy, as far as the energy curriculum goes. And so we want to be the venue that brings together academia, industry, regulators, the exchanges, and facilitate a healthy conversation. And that's exactly what I think this morning has achieved.
One thing struck me as looking at all these presentations was how many question marks there were in these various presentations. And that suggests to me that we'll probably be meeting again sometime in the future to see how things actually work out and what further questions are going to be raised when we learn a little bit more.